Look at this VDD chart with me. Bitcoin looks pretty rough, near 63,500, but old buyers are still not really moving. This number on the right is the part I care about. VDD, 0.357. That is cold, really cold. If the final capitulation were already here, or if old coins were dumping hard, this line should be waking up. But it is still sitting down here, near the lowest 7.5% since 2016. So yes, we are in a bottom zone, but the deepest bottom signal is not fully here yet. Quickly, let me explain what VDD is doing, because this is not just another line on a chart. VDD is basically watching old coin movement. The older the coin, the more weight it carries when it moves. So when VDD is low, it means long dormant coins are not really waking up. That is why I keep saying old buyers are quiet. It is a behavior signal, not a price target. So here's my read, without dressing it up. This is a bottom zone, but I do not think the market has stamped the final bottom yet. VDD says old buyers are quiet. Reserve risk says conviction is cheap, but not fully washed out. And URPD says the fight is sitting right around spot. That mix is uncomfortable. It is not a clean breakdown, but it is not a clean all clear either. Now jump to reserve risk. Again, do not overcomplicate it. The latest adjusted reading is 0.00636. You can see it right there on the side. That is low, but it is not as brutally washed out as the deepest 2018 or 2022 lows. And that detail matters a lot. It says conviction is cheap, but the market is not fully cleaned up yet. So this supports the bottom zone idea. But it also says the bottom may still need more time. Now, this part is important. I am not saying 2018 is going to replay tick for tick. Markets never do that cleanly. What I care about is the behavior. In the 2018 stress window, VDD got down near 0.258. In late 2022, it got near 0.406. Today, we are at 0.357. So old buyers are quiet enough to say bottom zone, but not extreme enough to say the market is done with stress. That is the difference. Now this URPD chart is the battlefield. This is where it gets very practical. Under the current price, the 60 to 63,000 area holds about 812,000 Bitcoin. That is the support pocket. Above price, 63.5 to 68.5 thousand holds about 1.51 million Bitcoin. That is near overhead supply. And then higher up, 70 to 92,000 is a much bigger shelf. So the market can bounce, but it can also get rejected before the real bottom is finished. And this is what URPD is for. It groups Bitcoin by the price where those coins last moved. So it gives us a cost basis map. Big clusters below price can act like support because those holders are closer to comfort. Big clusters above price can act like resistance because people near break even may sell into a bounce. So URPD is not predicting the future by itself. It tells us where the market is likely to fight. So the map is pretty simple. If Bitcoin holds 60 to 63,000, the bottom zone read stays alive. If it pushes back above 68.5 thousand, then the nearest trap supply starts getting cleaned up. But if 60,000 breaks cleanly, that support pocket becomes failed support. And if price runs towards 70 to 92,000, do not treat that as empty air. There is real supply sitting there. That is why I am not rushing to call the final bottom. Here is the checklist I would keep on screen. First, VDD should stay muted, but ideally we want a cleaner stress signal before calling the full bottom. Second, reserve risk should stay compressed, then slowly turn with price repair. Third, that 60 to 63,000 URPD support needs to hold on pullbacks. If these hold together, the bottom zone is intact. If they break together, the market is telling us the bottom has not finished forming. So my core judgment is this. Old buyers are quiet, the bottom zone is real, but the final bottom may not be fully in yet. That is the whole point. Bitcoin can still chop, fake out, and punish impatient entries. The chain is showing stress, but not a clean finished bottom stamp. So for me, this is a pressured bottom zone, not a victory lap. This is public on-chain research, not financial advice.